Welcome back to Just Ask George. I'm David Wolf, affiliate banker with BH Capital, and I'm here with the president and founder of BH Capital, George Lovato Jr. I almost tripped over your name.
One more time.
How dare me?
It's easy to do. There are a lot of vowels in there. So.
Well, I try. Anyway, we've got a very interesting segment, Grab Bag Subjects. This is a segment where I it really follows the Just Ask George. I asked George about a random subject relating to structured finance for your business. So here goes. The capitalization of capital formation costs. What are we thinking about?
A lot of people do not understand that all the costs you incur associated with forming a loan or forming equity are not really expenses. They're a deduction from your cash, but that cash, those expenses, are then capitalized on your balance sheet. So you actually grow your balance sheet. People often think that, these are just expenses. The legal costs, the accounting costs, the cost for the appraisal or the feasibility study, the costs to hire professionals such as BH Capital, et cetera, et cetera, et cetera. All those things are just a drain on my resources. No, they're not. You are actually adding back.
So you can say they're investing. They're investing
Absolutely.
In their balance sheet.
It's an asset, not an expense.
Unbelievable. We'll do another segment about balance sheets. I know most entrepreneurs and business people, many of them, maybe not most, tend to look at their income statement as their sort of the way they run their business. They don't think about the balance sheet.
The barometer.
But is there? I know we're in a different segment now, but is there something you'd like all entrepreneurs that are listening to know about how important the balance sheet is and the structure and architecture of it?
Don White, the Mr. Goodwrench of public accounting. He's really been my wingman for well over 20 years. We've worked on scores and scores and scores of projects together. He was always amazed at my approach to looking at the balance sheet first and not the P&L. And he'd say, but they're losing money. And I'd say, Don, first let's look at the critical mass. What's the universe we have to work with? And my task in some cases, and I'll give you two really unique examples that can affect the perception of how a company can look. So let's first talk about prior period adjustments. Client comes in, they've got 3 years of financial statements, and the first year that we're using as the measurement tool shows a small loss, and the other 2 years show a profit. Okay. Now, when we look at that, the year that they suffered the loss, there was a transaction where they had incurred a liability 3 years prior. The actual transaction had occurred 3 years prior, and as a result, they paid off that liability in this particular year where they reported the loss. And so I went to Don and I said, isn't there a way that we can make these 3 years look consistent? Because the loss here actually was incepted way back here. And he said, yes, that's a prior period adjustment, the Mr. Goodwrench.
That's beautiful.
And so he was able to go back and make those adjustments, and as a result, the 3 years showed the profitability. Bingo. The lenders were exceedingly happy, and the transaction goes forward, and the client is successfully funded. Now, and in another instance, we looked at the P&L, and we discovered that there were a lot of expenses that they were reporting on the P&L that really needed to be capitalized. And so when Don went in there and actually evaluated line item by line item, we moved over literally hundreds of thousands of dollars onto the balance sheet.
What kinds of things, this is maybe a specific example, but what kinds of things may be mistaken for expenses when they should be capitalized?
There were some costs associated with producing masters and producing these masters. There was a tremendous amount of expenses around that, and those masters last for 5, 6, 7, 10 years, and so you actually amortize those expenses over a period of time, and so you're moving it over
to
here,
the balance sheet,
and a host of other things.
Okay, I was just curious what can slip by that you may not be.
Yeah, it really does take a good set of hands, like a CPA, that knows their stuff and understands FASB and GAAP and all that those wonderful resources and rules rules and guidelines in order to make those evaluations.
Okay. I know we're with grab bag subjects here on Just Ask George, so let's move to the next one. Letter of credit. Define, what is a letter of credit? We hear this all the time. People say, oh, I've got a letter of credit from my bank, but they don't quite understand what does it mean.
I'm asked about it every day. A letter of credit is not a negotiable instrument. It's not like carrying a $20 bill around and being able to cash it in. Usually a letter of credit is issued by an institution, a banking institution, and based on certain covenants and terms and conditions, that bank will honor that letter of credit and turn that letter of credit partially or in total in cash over to a third party. Might be for payments, principal and interest payments. It might be there might be a whole host of mechanisms that are utilized. Okay. But you can't take a letter of credit and travel across the world and hand it to another bank and say, "Lend me money on that letter of credit."
Not to a third bank. It's referring to the bank that originated the letter.
Right.
Do I have that right?
Right.
Okay.
And so people think that it's like carrying a $20 bill in their pocket, and it's not.
Could it be thought of as a soft commitment from a bank that yes, the credit is available, or it's not even that?
No. There as many hairs as I have on my head.
Thank you very much, ladies and gentlemen. That's why I chose these very large headphones for our
He makes
project.
big fat jokes about me, and we talk about the bald factor. So anyway, the interesting thing about a letter of credit is that it shouldn't be misinterpreted as currency. It's just not.
That's the key.
There's all kinds of terms and conditions. Like I said, as many hairs as I have on my head,
yes.
All the covenants could be built in there. Mm-hmm. So because you hold one doesn't mean you can hand it to somebody else and
it's an indication that a bank is behind you.
Well,
I'm trying to get to my definition. I'm trying to reframe this a little bit for me.
What it represents, depending on those terms, conditions, and covenants, is that certain things have to happen in order for that letter of credit to be cashed. And if those things don't happen, it doesn't get cashed.
Okay. So it lays out the conditions and terms that need to happen in order
as many hairs as on my head.
As long as you. Yes, exactly. It's the bank of hair removal in my case. Okay. Next, we want to talk about what is a letter of intent.
Oh. In the obstacle course, if you read that book, I had received several letters of intent. And none of them turned into cash. The letter of intent originated really in the structured finance environment on Wall Street, and it was the intent of an investment bank to provide financing under a certain structure, and they do it today. It's still done today. So when let's say Salomon Brothers issues a letter of intent, they're going to collect so many dollars to cover their costs up front. They're going to collect unaccountable, their fees, which is a percentage under FINRA. There's all kinds of rules that they have to follow.
Okay.
And then it spells out the commission they're going to get, the warrants they're going to get structured in the deal, so on. And there's money associated. There's consideration associated with the execution of that letter of intent with an investment bank. Generally, a $100 million transaction is going to require the recipient of the letter of intent to possibly come up with as much as $1 million plus their cost of capital formation. So I mean, they're real.
They're going to spell out what they need in order for this to be.
Now,
funded.
that has been prostituted by a whole host of bandits, pirates, and bad guys, that they're out there issuing letters of intent, and they have zero capacity to do anything in terms of providing financing. They're brokers, they're bad guys, they're pirates, and they issue these letters of intent, and as a result of the letter of intent, it says, we're going to do this, and then there's a huge out clause in there, which you really have to watch for, and it says, basically, you're going to pay me all this money, and I'm not going to do anything. And a lot of people get sucked into that. And so my advice about a letter of intent is pretty straightforward.
Okay.
A letter of intent is only issued by the real guys. Now, those real guys are investment banks, managed investment funds, insurance companies, so on and so forth. Real institutions.
Okay.
And there's real juice or meat behind them. Now, an MOU, a memorandum of understanding, just simply sets forth what the institution intends to do. And look, I understand what you need. This is what I think you need. This is what we think we believe is the structure of the transaction.
Right.
That's all that does.
It's the prelude to the actual transaction, understanding
exactly
what
it
each
is.
party needs.
It's not a financial commitment of any kind. It's just a framework for people to work within.
Now, there's a sequence to this, to using these instruments. A memorandum is the prelude, right? And then it moves and progresses to a more serious type of commitment.
A commitment letter or a letter of intent, depending on the type of institution you're dealing with.
And it's very important to really follow that structure.
Yeah. So a letter, the other thing about commitment letters is people show up all the time and say, I've got this commitment letter, and can you give me a 1-year loan based on this commitment, or 6 months? I just had this happen the other day, and it's on my blog, which is at bhcapitalltd.com. Hit the blog button, and this blog that's coming up actually talks about commitment letters, and commitment letters aren't really a commitment letter. And I can't tell you the number of times over 30 years I have had a commitment letter in my hand, and I've not had that institution show up at the closing table. I've had them back away for absolutely no reason. I've seen them financially incapable of honoring their commitment, and I have seen the tides of change move on the shore, and all of a sudden, kaboom!
Whoa!
There you are at the closing table, and they don't show. And there are dozens of banks around the country to which I would not accept the letter of credit today. Seriously, I'm not joking. And so this gentleman, one of your compadre affiliates, brings this guy to the table, and he says, I've got this letter of credit, and this is the Bank of America of Australia, and he goes on and tells me how great and wonderful they are. And I said, well, first of all, I don't know the institution. Second of all, do they have a unit involved in your type of business in the energy field? And do they have correspondent relationships in the United States? What kind of condition are they in? He couldn't answer any of those questions. We did some research, and we found out this bank is laying into the tide of billions of dollars of future losses. They bought companies that had existing losses. Today, those companies are bleeding. And they don't have an energy division, and they don't have, and they're really incapable right now. And so it's just another institution I wouldn't accept a letter of commitment from, a commitment letter. It isn't what they all think it is. A commitment letter is a piece of paper, and there are people behind that, and people can change their mind.
Oh, there it is. A distinction between the letter itself and the people involved in the transaction. And you've always said people and then the deal, right?
Exactly. People first, project second.
I love it. BH Capital Limited BH Capital LTD.com is the website. George Lovato Jr., the founder, joining me again on another segment of Just Ask George. This our Grab Bag Subject series, brought to you by the Obstacle Course. And you can find out about the Obstacle Course. There's a series of books in the making. A couple of them are out there already, available everywhere. But you can get more information
at the store nearest you.
At the nearest you, whichever.
You can go to obstaclecoursebooks.com and buy it there.
There it is, their website.
You can buy it at bhcapitalltd.com.
Perfect.
There are links on justaskgeorgeradio.com. There are links everywhere.
Links flying about.
We are linking and potting.
Link with us next time, folks. We'll see you next time on Just Ask George. I'm David Wolf, George Lovato Jr. Have a good week.
Thanks, Dave.